Good afternoon. Good afternoon, and welcome to the Italian Ministry of Economy and Finance in the Parlamentino room. We are here to present two new OECD reports on corporate governance and capital markets. Minister, the first report is on the future of corporate governance in capital markets following the COVID-19 crisis. The second report is the 2021 edition of the OECD Corporate Governance Factbook. Minister Daniele Franco will introduce the presentation of the two reports, which will be delivered by the Secretary General of the OECD, Mr. Matthias Cormann, while the last intervention will be by Mr. Carmine Di Noia, co-chair of the OECD Corporate Governance Committee and Commissioner at CONSOB, the Italian Securities and Exchange Commission. Let's start giving the floor to the Minister of Economy, Mr. Daniele Franco. The floor is yours.
Thank you very much, Secretary General Cormann, ladies and gentlemen. First of all, let me say that I'm sorry for the delay, but I was held in a meeting of the government. Second, I would like to welcome and congratulate Mr. Cormann for his appointment at the OECD in these challenging times for the world economy. Old and new challenges are accentuated by the severity of the COVID crisis, and I believe the OECD is well placed to assist government to address these challenges. In the perspective of the recovery which is underway, efficient financial markets are essential to the overall performance of our economies as they can improve investor confidence, capital formation, and capital allocation. Corporate governance frameworks, shareholders' rights, and the role of auditors, just to name two, are key factors for steering companies out of the pandemic crisis. Well-designed corporate governance setups can foster adequate funding structures that make firms become more resilient and prosper. Therefore, on the eve of the next week G20 meeting, I'm very pleased to have the opportunity to call the attention of policymakers and market participants on two important new OECD corporate governance and corporate finance publications. The report on the future of corporate governance in capital markets following the COVID-19 crisis takes stock of the latest developments in global capital markets with reference to corporate governance and the related policy measures. Public equity and corporate debt markets allow firms to access fundamental external sources of financing and to build resilience. The global phenomenon of delisting from stock markets in recent years has not been matched by new listings, signaling a decline in reliance on public equity markets for companies, especially small ones. On the basis of a thorough evidence-based analysis, the report presents an overview of capital structure, corporate performance, the use of market-based financing, corporate ownership structures, the last 20 years. Its conclusion and advice in terms of corporate governance framework are particularly useful at the current juncture, while companies' governance requirements are put back into force after some were relaxed due to the pandemic. Moreover, there is a lively debate on possible improvements of regulations and practices. The other publication released today is the OECD Corporate Governance Factbook. The Factbook, covering all G20 and OECD member countries, shows how these economies are implementing various aspects of the principles of corporate governance concerning, among others, institutional and regulatory framework, treatment of shareholder rights, disclosure, as well as requirements related to boards of directors. This edition of the Factbook, offering new insight on stock markets and the corporate landscape during the pandemic, is a perfect complement to the report. The two publications indeed broaden our toolkit to improve corporate governance frameworks and practices across OECD and G20 countries, with a view to improving companies' access to finance. This is a very relevant issue for the recovery phase, in which we want to avoid that firms are held back in their investment by lack of adequate funding. With this, let me hand over the floor to the OECD Secretary General, Mr. Matthias Cormann, who will further articulate on the report. Mr. Cormann's intervention will be followed by a comment by Mr. Carmine Di Noia, CONSOB Commissioner and Vice President of the OECD Corporate Governance Committee. Matthias, the floor is yours.
Thank you very much. Minister Franco, Carmine Di Noia, the OECD co-chair of the OECD Corporate Governance Committee. Colleagues, I'm delighted to be in Rome to launch the future of corporate governance and capital markets following the COVID-19 crisis and the 2021 edition of the OECD Corporate Governance Factbook publications. Let me begin by thanking the Minister for the Economy and Finance, Daniele Franco, for hosting us in the context of Italy's presidency of the G20. The OECD and Italy have a long-standing history of strong cooperation and partnership in the areas of corporate governance and capital markets. Good corporate governance is, of course, a key pillar of open and market-based economies, a global level playing field, and a rules-based international order. All essential ingredients to optimizing the strength and the quality of our economic recovery with stronger, cleaner, fairer growth, prosperity, and general well-being. Indeed, when combined with well-functioning capital markets, good corporate governance is key in supporting the recovery of our economies following the COVID-19 crisis. The prospects for the global economy continue to improve. While, as our report, The Future of Corporate Governance in Capital Markets, touches on, some of these important risks remain and must, of course, be appropriately well managed. We must ensure that policy frameworks incorporate and adequately anticipate the risks and transformations occurring in the corporate sector and in capital markets. For example, debt has been an important source of financing to help sustain our economies through the pandemic. But it has also accumulated to record levels. In 2020, a record $2.9 trillion US in corporate debt was issued globally by non-financial companies. As a result, the volume of outstanding corporate bond debt reached an all-time high of almost $15 trillion US at the end of 2020. More concerningly, the quality of this debt has also declined. Between 2018 and 2020, the portion of BBB rated bonds, the lowest investment grade rating, accounted for 52% of all investment grade issuance, compared to just 39% during the period of 2000 to 2007. The stock markets also provided record amounts of capital to support established companies during 2020, although not to new upstarts. This adds to an increasing trend of funding for fewer but larger companies. Part of the explanation lies in the lower cost of debt financing and better access to private capitals. Since 2005, more than 30,000 companies have delisted from stock markets globally, notably in the United States and Europe, which is equivalent to losing 75% of all listed companies today. These delistings have not been matched by new listings, leading to a considerable net loss of publicly listed companies. Unfortunately, not all companies are delisting or not listing because of better alternatives, but rather because of structural challenges in the capital markets ecosystem. These include the bias towards large established companies, high listing costs, and the systematic acquisition of smaller growth companies. Without a robust policy response, there is a real risk that the already high number of undercapitalized and underperforming firms will increase, while potentially productive resources will increasingly be tied up in non-viable larger companies dragging down investment and economic growth, which is, of course, not something that we want. The global economic recovery from the COVID-19 crisis provides a unique opportunity to address some of these issues and update some of our policies for capital markets, including through the review of the G20 OECD principles of corporate governance. A strong corporate governance framework is essential for a well-functioning capital market. It fosters an environment of market confidence and business integrity. So let me highlight some of the priorities we have identified in this report for development. Firstly, it is crucial, absolutely crucial, that the corporate governance framework is adapted to address some of the weaknesses revealed by the pandemic, such as the management of health and supply chain risks. Corporate governance frameworks must also be strengthened to better address issues of audit quality, increased ownership concentration, and complex company group structures. Second, we need to improve the management of environmental, social, and governance risks, notably by developing comprehensive frameworks for producing consistent, comparable, and reliable climate-related disclosure. Third, insolvency frameworks should support recovery and resilience. Crisis response policies have been holding back bankruptcies, which would otherwise have happened. And these will re-emerge as business support is wound down and the economy is allowed to adjust. We must also keep in mind the accumulation of low-quality debt in our economies before the pandemic. It will be important to develop fit-for-purpose insolvency regimes that are coherent across jurisdictions. And fourth, facilitating access to equity markets for sound businesses should be an overarching policy objective. This will help strengthen the balance sheets of viable corporations and the emergence of new business models, which are essential for sustainable recovery and long-term resilience. The Corporate Governance Factbook, which we are also launching today, offers systematic and comparable information on how the G20 OECD principles of corporate governance are implemented across all OECD and G20 countries. The Factbook highlights the latest trends in regulatory approaches to corporate governance based upon experience across 50 jurisdictions. In doing so, it supports informed policymaking to achieve its main purpose of helping governments and regulators to translate the G20 OECD principles into their own national legal and regulatory frameworks. I'm certain that it will serve as a crucial evidence-based tool to inform the review of those principles and to help improve the performance across all jurisdictions. Dear ministers, dear minister, colleagues, solid corporate governance frameworks and well-functioning capital markets will play a very important role in supporting the recovery of our economies coming out of the COVID-19 crisis. They will certainly help make the business sector more zero transition. So I'm really appreciative of you having facilitated this launch of your presidency of the G20 Finance Ministers meeting in Venice in a few weeks' time, and I very much look forward to joining you in Venice, where we will have some important work to do. Thank you.
Thank you very much.
Minister Franco and Secretary General Corman, on behalf of the OECD Corporate Governance Committee, chaired by Masato Kanda, thank you for launching today the two important OECD reports. They fit perfectly into the review of the G20 OECD principles of corporate governance and are the result of the continuous work of the OECD Corporate Governance Committee. The OECD principles were endorsed by G20 leaders in 2015, and as we heard by Secretary General Corman, both advanced and emerging economies, including countries such as US, Japan, Italy, UK, as well as China, India, and Indonesia, the next G20 leader, agreed for the very first time at the highest level on a common set of principles in order to build an effective corporate governance framework. Following the COVID-19 crisis, it's clear that many aspects of our economies and of the functioning of capital markets are changing, which makes this the right moment for the upcoming review of the principles. This is exactly why the OECD Corporate Governance Committee has developed these two important reports. So the first one, The Future of Corporate Governance in Capital Markets, provides an evidence-based overview of developments in capital markets globally. It shows how important capital markets will be on the road to recovery from the COVID-19 crisis by supporting the recapitalization of the corporate sector, in particular in Europe. This report, we heard, formulates important policy recommendations on many areas, such as access to capital markets, especially by SMEs and growth companies, ESG risk management, concentrated ownership, insolvency, digitalization, and creditor rights. They will guide the review of the G20 OECD principles. Let me raise your attention briefly on three of them, in part already mentioned. Stock markets have always been playing a key role in providing companies with equity capital, and in this way, the financial resilience to overcome temporary downturns. As we heard, since 2005, around 30,000 companies have been delisting from stock markets globally, notably in the US and in Europe. These delistings have not been matched by new listings, which has resulted in a considerable net loss of publicly listed companies, which are around 40,000 worldwide today. This trend has particularly affected smaller company IPOs, resulting in a larger portion of growth companies shying away from immediate access to public equity financing. So the report shows that first, it should be an overarching policy objective to facilitate access to public equity markets for sound businesses and to address structural weaknesses in the stock market ecosystem, like the cost of listings, ensuring that there are no unnecessary regulatory barriers or supervisory uncertainties. Otherwise, companies may be discouraged not only from going, but also for staying public. Second, and this is important, from the perspective of inclusiveness and financial democracy, a well-functioning public equity market should also provide ordinary households with the opportunity to directly or indirectly share in the return on capital, giving them additional options for managing savings and planning for retirement. Third, to balance the current focus on large listed companies by institutional investors, the report highlights that it's important to improve the visibility and attractiveness of smaller growth companies, for example, through dedicated analyst coverage programs and specialized incubator platforms to prepare growth companies for capital market financing. The other work published today has been already mentioned, is the OECD Corporate Governance Factbook, provides a unique basis for understanding the reality of different jurisdictions and how they adapt the recommendation of the G20 OECD principles to their particular market conditions and legal systems. It covers 50 jurisdictions, all OECD, G20 and FSB members. It will be an important reference for the review of the G20 OECD principles. As we have just heard from Minister Franco, the two reports broaden our toolkit to improve corporate governance and capital market framework and practices, with a view to improving companies' access to finance, which is very relevant for the recovery phase. I would encourage everyone to look at both reports and their summaries and all the material related online at oecd.org. I thank all the participants and wish you a very good evening.
So, thank you very much. I think we can close the presentation here. I would like to thank once again the Secretary General for having joined us in Rome. We look forward to meeting you in Venice very soon. And thank you very much to Mr. Di Noia, Commissioner Di Noia, for his comments. And again, we stay in touch. So, thank you very much.
Thank you.